not just the dot-com collapse, but the dot-com inflation in the first place was a kind of a signal, what are we investing in really? Does anybody, what is this really? Is this something you can eat or live in? It's a website, and you can buy and sell a catalog. So that idea that we were investing should have been a signal that, okay, maybe growth isn't, we're trying to find growth anywhere we can, maybe growth isn't as robust. We had this idea, you go back to the 60s, there's a lot of growth. In the 70s, there's not as much growth. So what we did was we tried to find ways to create growth in a different way, more efficient ways. And some of the things they did was change how we lent money. We changed how corporations were set up. We gave CEOs large stock options. We did equity buyouts, and they made companies more efficient, threw people out. They got other jobs in other efficient companies, but we kind of managed to keep growing with less energy. So we managed to do these things, and we kind of still had the psychology of growth. Then I think in the early 2000s, we were still saying, well, we still need to keep growing. We'll do these new derivatives and new subprime mortgages to try and keep things going. So we've kind of gone further than maybe there would have been signals earlier. There probably are signals earlier. Prices of energy were starting to go up and down. That was kind of a signal.
A signal of what?
An interesting thing about the stock market or energy prices or commodities is when you see a lot of volatility in stock prices, you can tell that something's about to occur, and it's usually going to be a collapse. When you see a lot of volatility in energy prices, you can tell something's about to occur, and it's going to be a price increase. And we had a lot of volatility in the early 2000s with energy and with stocks, and they're going to go in different directions.